morning and happy Monday. Welcome to the Rick Helps Real Estate live stream. Live every morning at 8:30, Monday through Thursday, with my lender buddy Pat on Friday. Although this Friday, we're going to have cardboard Pat because he's having hip surgery. So he's going to feel much better. So hope everybody had a super weekend. I know I did, and I'm looking forward to a very active week. This is not a crash channel, so if you're looking for me to tell you that the market's going to crash, I don't play in that sandbox. I just look at the numbers every day, and I like to share them with you, and we can kind of figure it out together. So right now, today, we have 7,240 homes on the market, and if you've been following my channel at all, you know that that's a higher number than what we've been seeing. Back in April, we were seeing numbers in the 4,000s. So it's just about almost doubled, but it's still incredibly low. We had 4,063 homes come on the market the past 7 days, of which 3,779 went under contract. It's a difference of 284. And we had 1,766 price reductions. That used to run around 1,300. So people are having to change the price of their house. And we're going to talk about seasonality today, and we're going to talk about what is normal. And at the end of this video, I've got 8 tips on what not to do for your house and preparing it for sale that won't add you any value. So stick around for that one, and let me turn my phone off for a quick second. Here's where we're at this morning on the 7-day moving average. You can see that the red line is kind of where we're at right today. That's the numbers of homes that went under contract. So it is lower than what we saw back here, and that was last year. And so we see the blue line, listings that are coming on board in the past 7 days, of course, increasing. It's hard to compare to 2020. So we're going to be looking at numbers comparing to 2020, and that year was just all whacked out. So when you see that we have a 36% increase in listings, it's coming from a very, very small base. And so I got a couple notes here that we had a non-seasonal increase in supply, and August is usually the lowest. So we're going to take a little peek at that here in a minute. August is usually the lowest when it comes to inventory coming on. But it's up 42% since May. Now, there are some price points like between 400 and 600,000 where it's doubled. And between 600 and 800,000, inventory has doubled since May. Last year, demand dropped when it was supposed to rise and rise when it was supposed to fall. April, we had 12,862 homes under contract with only 4,177 active. That's what was pushing the prices up so dramatically. There were only 4,000 homes out there and 12,000 of them going under contract for the month. And today we have 11,743 under contract with 7,166 active. So you're going to see price pullbacks. And the pullback, as I explained last week, is, you know, when you have a very active market like we have right now, people get exuberant and go, oh, I think I can get this for my house. Then reality hits because buyers are getting more choices out there. The buyer count is down slightly. Inventory is up 30%. You just have more choices. Buyers are still kind of sitting on their hands, but not quite. They've just kind of maintained their little steady pace. But you look and you go, what happened to the bidding wars? Well, they're finding more homes. Not a lot more, but a few more. So if we take a look at this, and you can see this is where we're at with listings. We're still down here in the basement. Now, this is going to hit the brown line here next week. So if we're sitting here at 7,200 homes this morning, then this is going to pop up here matching 2020 levels. But look how much lower 2020 was. But I want us to notice something else too, that now this came crashing down because of the pandemic, but here, we still had summer dips like in August, right? See how it went down in August, and then up here it kind of went down in August. 2018, it just kind of muddled along, and then it increased. These are listings. That's going to increase between now and the end of the year. That we know. Went up then, went up here, and we're going up. So we're going to have more inventory between now and the end of the year. There's no doubt about it. When you start getting into price ranges, and this is where I want to show you that where we're really starting to feel it, is 400 to 600,000. See, in May we had 693. Today we have 1388. If you're trying to sell between 500 and 600,000, are you feeling any pressure? In May they had 444, 840, so it doubled, and we're getting hit hard between 600 and 800,000. This doesn't mean that prices are going to fall. It just means asking prices are starting to come down to more realistic levels, and you can see that we were sitting there at 613. Now we are at 950. This one here is kind of telling the story a little bit too, in that this is the closings per month above list price. It reached a high of 60%, and now we are 53%. The key to remember on that was these are contracts that were written last month, so it lags a month. So these are last month, and the number of homes, the amount that it's gone over listing prices was running about 25,000. Now it's about 15,000. So that is coming down. It's going to be interesting to see what that looks like a month from now. The August contracts, I predict it's probably going to be around 40% over list, not what we're seeing right now. Here's an interesting thing here too, though. Now, if you look at this, Open Door bought 657 homes in July, and OfferPad bought 143, Zillow bought 156 for a total of 962. So why are they doing that? We are still going to see increases in values of homes between now and the end of the year, because we still haven't reached that balance between homes for sale and contracts. There's still a shortage, an inventory, and these big giants, they realize it. They're also seeing an increase in institutional companies coming in and purchasing their homes, turning them into rentals. So they see a cash cow coming in on Q4, the last quarter. So you can tell that by how much they bought in July. So they know that in the quarter, they can end the year pretty good. So they're out gobbling them up like crazy. They don't need a lot. They just want to, purchase it and maybe make $5,000 on the home. So they're playing a bit of a numbers game. Going to be interesting to watch as well. But that's a clear indication that Q4 is not going to see sales prices dropping. You're going to see asking prices dropping. If we look at this one here, this is from Redfin data, and this is national, and it's saying that new listed homes down 2.1% year over year, with a 1.2 months of supply. Number of homes for sale down 32.2% year over year. So we're seeing a dip of homes for sale versus 2020, just like you saw in the chart before. Now, are we going to get any foreclosures coming up? Well, here's Black Knight, and Black Knight says overall mortgage delinquencies edge closer to pre-pandemic levels, but 1.45 million remain seriously past due as foreclosure moratorium expired at the end of July. So that's already expired. They go into some detail here, but I want to come down to Phoenix in this chart and show you where we're at. Here's Arizona. So as of July 2021, we have 3.34% of mortgages that are behind at least 90 days. Let's see, top 5 states by 6-month improvement, 3.34. So there's nothing there that looks like it's going to be alarming. It's going to dump a whole bunch of homes on us. The amount of pre-foreclosures we have out there doesn't even show up on the chart. So that's a tough one. Now, let's get to 8 home upgrades that you probably shouldn't spend any money on. This is 8 home upgrades that don't pay off. So if you're thinking of listing your home, you say, what do I fix up? What do I do in the yard? Extensive landscaping. Basically, what they're saying here is landscaping can definitely improve your home's curb appeal. But if you get carried away, you'll end up wasting your money. Spending $15K on exotic plants, flowers, and trees won't add any more value to your house than cleaning around the house and adding sod to create a well-maintained lawn. So don't overdo it in the backyard. Lighting bling, really fancy lighting. It might appeal to you and it may not appeal to somebody else. So just get some basic lighting in there and make sure it's newer, but don't go overboard. The latest electronics. Nobody really cares that you got all the latest bells and whistles. If they want it, they'll add it later, but it does not add value to your home. A wine cellar. Not everybody likes wine. You put it in a big wine cellar, you're not going to get your money back. A chef's kitchen. To be clear, if your kitchen is out of date, upgrades can add value to your home. But if you spend $50,000 on the marble countertops, state-of-the-art appliances, it won't increase your home's value by $50,000. Extravagant upgrades. Any type of opulent or lavish upgrade should be avoided. So don't go crazy. Wall-to-wall carpeting. Put it in the bedrooms, but don't put it in the rest of the house. Maintenance projects. Maintenance is a necessary part of home ownership that you can't avoid. However, don't expect buyers to pay you back for preserving your own home. And what they're saying here is, just because you went out and fixed everything doesn't mean that your home's worth more now. Buyers expect that to be working. They expect things to, the air conditioning to run. They expect the toilet to flush. So you can't go around bragging and go, well, this home is worth more because everything that's in it is operational. So I also included in the link below a funny article on how to make sure your home purchase, your buying experience is stressful. Not unstressful, but stressful. It's a funny read, and it's in the link down below. Take a look at it. And it's kind of, what not to do when you're purchasing a home. Got a comment from Gustavo here. I'm still seeing bidding wars in the 300,000 range. Go 30,000 to 50,000 over asking. Still crazy in the 300,000 price in Chandler. It is. Let's take a look at that. Because in Chandler, I'm going to go to our chart here, and let's pull up 300 to 400,000. Let's see what's going on with the inventory there. And I'm just going to pull up specifically Chandler. Chandler's doesn't have the huge spike in inventory. See that? 94 homes. There's your problem. So in that price range. So from May, here's July, here's May. They had June, May, 65 homes. Today they have 94. Not enough to make an impact. So, and there's a lot going on in Chandler. So this is very neighborhood specific. Let me take off that 600,000. That shouldn't have been on there. 33, it's worse than I thought. That's why you're seeing the bidding wars in Chandler, Gustavo, until that number goes up. And this is a great example, folks, of supply and demand. If this supply is way down here, you're going to have bidding wars. Now, what about Chandler over 600,000? What's going on in that price range? It's shot up to 61. So you're not seeing bidding wars in 600,000. You're seeing massive bidding wars in the entry level area. But look at that. Look at that spike. Boom, boom, boom. That's where people are getting hammered right now. One KCH finally went out looking this weekend, was told to still be preparing to pay over asking with the appraisal contingency. Again, it depends on your price point. If you're looking at 600,000, nope, no way. You don't need to do it. 500,000, marginal, hard to tell. It depends. If we look at in Chandler, 500,000. Now, a lot of agents don't follow it as close as you guys are following it right now too. So I think you can arm yourself with information and go, well, now wait a minute. Over 600,000 inventory's doubled. So am I really going to see a bidding war? And here you are in the 500 to 600,000 range. You got 33. You're matching 2020 levels. There's going to be some bidding going on there. We are most likely going to build new. Never walk through so many unmaintained homes at outrageous prices. Yeah, I'm telling you, it's crazy. It is absolutely crazy, the lack of maintenance and what people think they can get away with. I agree. Here's your 600,000 to 800 range here. That's the one I just showed you. There's 61 homes. Brutal jump in inventory, but a welcome jump in inventory. So I think, you guys watch this channel long enough, I want to see a more balanced market. But what I started with was, what is normal? What is a normal market? And we really haven't seen anything normal the past 2 years. In my lifetime, I've seen balance, unbalanced, balance, unbalanced. That's always going to continue. And the sad part is, when you've had a normal year, you look back and you go, wow, I didn't realize it was that normal. So you never know what's going to happen. It's as we go forward in the last quarter here, from what we see, inventory will naturally increase like it does seasonally. So we're getting back to our seasons in Arizona on when we get more inventory and when we don't. Normally, January is when we see the most homes come on the market, and then February is when we see the highest number of price reductions. The reason for that is nobody lists their house over the holidays at Christmas time. And so then they get really optimistic and they just go for it in January because they think it's going to be busy. And then in February, they go, my house is still on the market. What the heck? So Carlos says, I am seeing a decline in price in comps in my neighborhood. You're in Queen Creek, as I understand, Carlos. And you got a lot of building going on out there. So inventory is increasing in new home construction as well. So we are heading to a balanced market. The only unknown is how fast we're going to get there. You look at certain price points, we're nowhere near a balanced market like what we just saw there in Chandler. So could take a long time. Some places are going to be in a balanced market in as little as 4 weeks in certain price points above $400,000. That's going to be very welcome for entry-level buyers. Rates are staying put. Now they've got the big Fed meeting going on. They turned it into a virtual event. So those poor people in Wyoming that expect this big party up there every year with the Fed and all the money being spent, they canceled that. That's the other unknown too, folks, is this pandemic is really slowing things down globally once again, and that's going to have an impact. So that's what's keeping rates from going up. So we need to continue to watch those and continue to watch the inventory. Tune in every morning here at 8:30. I will see you tomorrow.